Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Tuesday, October 30th, 2007. The market's closed, and we had another mixed day for the markets. The S&P 500 was down $1.10 on the spiders here. That's a loss of about 0.7%, while the NASDAQ was up a little bit. So we continue to see a very divergent market here between the S&P 500 and the NASDAQ, and between a lot of the stocks as well. So I'm going to continue to say that we are in a stock picker's environment. And for the S&P 500, you can see these are the levels I had outlined yesterday as far as that two-thirds retracement of the move from the October 11th high to the lows we saw last week. The market rallied a little bit more than 61.8% retracement. We saw a little bit of selling in here today. The market was also unable to hold above that 153.50 I had pointed out yesterday. So that gives us a little bit of reason for concern, but as I said yesterday, the next level below that would be near this 5-day moving average. We do have the Federal Reserve meeting tomorrow, and this market just seems very nervous ahead of that meeting. We also have on the short-term time frame a lower high now and these lower lows in here. So continue to be very cautious in here. It's a trader's environment. We've got some stocks that are just absolutely soaring. If you look at Google continues. It was up $15 today. But at the same time, a stock like Dry Ships, who's been a real momentum leader to the upside, just got smashed at the end of the day, down $22, $23 almost. So we have a lot of divergences in this market. Solar stocks kind of came unglued at the end of the day too. So it's something to be aware of, that we continue to be in a stock picker's environment, and we are, you've got to be cautious and take each trade for what you see, not what you think overall. And again, tomorrow is the Federal Reserve. That's going to keep a lot of volatility in this market. The semiconductors, why do I look at the semiconductors? Because I've been looking at the semiconductors every day for the last 15 years, and I'm going to continue to do that. So someone asked me what's the relevance of looking at them if I say that they're in a void in here, basically. Because they do have an overall impact on the overall market. And I think that this 450 is going to be continue to be an important level to monitor going forward. The market is bouncing a little bit. I expect this rally will fail. We do have a declining 5-day moving average. However, it is possible that this rally could continue up towards about 475. If you're playing it to the long side, I think you're playing a very dangerous game in here. And again, I think this should fail. The IWM is probably the biggest reason for concern in this market right now. Here's another market that retraced about 61.8% of that rally, or I'm sorry, that sell-off that began October 11th down to last week's lows. It came up and touched it, as we saw yesterday, right on the open. And now the market has broken below that first level of support that I thought was going to be important. That was this 81.40 level that had been acting as resistance. Held as support for much of the day, but then broke down and came right to that rising 5-day moving average. So we want to continue to just be very cautious in here. We've got a lot of mixed signals from different markets, from different time frames, and from the individual stocks. And my experience is that's something to be concerned about overall. I don't like to call tops, and I'm not calling it top by any means, but I think there is reason for concern with this market. So just trade what you see, and keep your opinions to a minimum as far as what's up too much or what's down too much. The market will reveal the trend, and right now that what it's telling us is a very mixed picture. And while it is a mixed picture from the market, you have to listen to that message and either be very slow and be on the sidelines, or be very quick and aggressive. Otherwise, if you're an investor, I'd say just know where your stops are and make sure you honor them. The NASDAQ 100 was up 10 cents today. You can see that it's, again, just continuing to grind higher. And it's been doing that on lighter volume. Yesterday I said maybe it's sucking in new shorts. If it fails here, it could fail pretty good, but there's nothing indicating it will. But from failed breakouts from failed moves come fast moves. I don't like the way the volume really increased here at the end of the day. You can see that it came right down to the VWAP, but it sold off on heavy volume. So that's it's only a 1-minute chart, so You can't read too much into it, but it is a little bit of reason for concern in the short term. We do have higher highs and higher lows though until we break really below 53.80 or so. I think 53.80 is an important level. I also think about 53.50, and just continue to be aggressive about managing your positions in this market.